There's an option strategy that's been making the rounds on YouTube of late. It's called the poor man's covered call. As the name suggests, it doesn't require a lot of capital to execute. But I'll tell you right now, it's not free money. The trade that you're going to hear about can be misleading in terms of its ability to transform a trader. But it does have a time and a place. It does have some opportunity with it. So in this video, I'm going to explain exactly what it is and how it works, and I'll explain the real risks attached to this strategy. So what is the poor man's covered call? Well, you've no doubt seen us show this in our classes if you're a Cashflow Academy student, and if you're not, come and join us to learn more about these 6 important boxes. Understanding these 6 boxes will transform your life and transform your financial future. So everyone understands that income is the money coming in, and usually that comes in from the job, right? The job. That's where the majority of income comes in. And then we all have expenses, and unfortunately those are minuses. But do you want your expenses to go up or down over time? Your instinct would be to say, oh, I want my expenses to go down. Actually, do you? I want my expenses to go up. And why is that the case? As my great mentor, Andy Tanner at the Cashflow Academy, has taught me years and years ago. I've known him for 25 years. And when he first said this to me some 25 years ago, I want my expenses to go up. I said, are you mad? And then he says, don't you want to travel? Don't you want to send your kids to the best schools or programs, give them every opportunity to succeed? Don't you want to eat higher quality foods? Don't you want this and that? And pretty soon I said, you know what? I want my expenses to go up just like you. So how do we do that? Well, we need to have more income coming in than expenses so that we have positive cash flow. If you are in a positive cash flow situation, you make more than you spend, you're in a nice situation to put money into assets. Now, what most people do is they say, oh, honey, we've got a little extra. Let's go shopping. Let's go figure out a way to spend this. And of course, they spend it right down to the penny, and then they have an unexpected expense and they get behind, and now there's credit card bills. So we need to get ahead, but we need to funnel that money into assets. What that will do is the transformation of your life. And the easiest way to get into assets is to buy stocks. Period. End of discussion. It is so easy to open a brokerage account. It's as easy as opening a bank account. You can start buying stocks 1 share at a time. In fact, they now even have fractional share buy programs. So you could buy half of a share. If you want to own Apple and it seems expensive, you can buy 1/4 of a share and build that stake over time as money becomes available. But the point is that as you acquire assets, it does something very meaningful. Number one, those assets will spit off income in the form of dividends, in the form of, if you know strategies, covered calls, how to sell a put to buy the asset, you can get paid premiums from the options market. It's click and get paid. So we can really dramatically increase our income through owning assets. And of course, we know that assets tend to rise in value. This is something I taught my kids at a very young age. Assets go up and liabilities, unfortunately, make your net worth go down. So as our assets climb in value, our net worth is rising. As our assets climb in value, we can generate more income. They tend to raise dividends over time. And all of a sudden, your cash flow is going up. And that, my friends, is how you get to increase your expenses and still be gaining value every month and gaining financial freedom. Now, this idea of buying assets, sometimes people get overwhelmed. Oh, this stock is very expensive. To buy that stock would require an immense amount of capital. What if instead of buying the stock outright, we bought an option to buy the stock? That's really what a poor man covered call is it's saying, I don't have enough or don't want to put enough of my capital into the stock. That would tie up a lot of capital or be very expensive. I'm going to buy an option that controls, that has the right to be able to buy the shares at a future date. And then what can I do against that option? I can now sell other options against it, which means I can still have monthly cash flow coming in. So now I'm selling short-term options against a long-term option purchase. And that's what the covered leap strategy is. The covered leaps means that we're buying a long-term equity anticipation security. Don't let that name overwhelm you. It's just a long-term option. That's all it is. So I pulled some numbers and I said, Apple is an expensive stock. Apple is something that right now trades at $273 per share as of this video. If I multiply that and buy 100 shares of the stock, that's $27,300. And someone might say, well, that's a lot of capital to tie up into one position right now for me. And if that's the case, look at the alternative. I could buy an option that has over 2 years until its expiration. I can buy control for multiple years. I'm talking probably 25, 26, 27 months worth of control here over Apple. So I'm not buying 100 shares, I'm buying control of it. But I'm doing it for a fraction of the cost because that leaps option only costs around $5,000. So this is no debt leverage. Let me emphasize, this is not taking on debt. This is not borrowing. This is using leverage that is not borrowed money. So when we think of leverage, a lot of times we think of taking out a loan at the bank, right? You're borrowing money and basically that bank is, you're on the hook to pay them off and you have to pay them interest and so on. This is not debt. As long as we had 5,000, we could buy this leaps contract. Well, some of you might say, well, what if I didn't have 5,000? Well, then we could go buy a leaps contract that costs less than that. Or we could pick a stock that's not at 273 per share and its leaps would cost a fraction of the amount. We could go find leaps on a lower price stock that only costs $500 or $300 or $800. And so really the financial markets are the great equalizer because you can find positions that have a risk component that's comparable to where you're at currently in your financial situation. If you have less capital, you can access the options market with less capital and still be able to generate those solid returns. So it's a great equalizer to be able to use this no debt leverage. And what leverage is, when we really think about it, is sort of like the stick that moves the big boulder, right? If I sit there and push on the boulder, it's very hard. But if I put a stick underneath it and I leverage that up, now all of a sudden the boulder just moves and it didn't take a lot of strength. It was just utilizing something that was able to move that bigger thing with less effort, less risk, really, because here the most we could lose is 5,000. Over here you could lose 27,000. Now I can sell the same covered call. So if I sold a covered call that brought in, let's say, $250 for the month, that $250 comes right in as income. That's spendable cash. That is money that I receive. Now, if I collect a $250 premium on 27,000 invested, my ROI, my return on investment, is not as good, right? So if we divide 250 by 27,300, I made just about 1% for the month. It's just shy of that, but let's call it 1%. Now look at the difference. If I sell that same option and bring in $250, but I did it against my leaps contract that only tied up 5,000, now I've got a 5% return on invested capital, and 5% return on the money we have invested can compound at a greater rate. Now, this leaps contract, here's the important part, and here's what you're not going to get from Reddit and YouTube and all of those other things, is there are caveats. There are things that are not as simple when it comes to the leaps contract. There are things that can get you into a bad spot, and that's why more education is so important, because within the leaps, we have to know strategies to be able to delta hedge and to do some things so that this doesn't get away from us on the upside or on the downside. Normally, when you own the stock, you're completely covered, and here we're still covered, but there's some time decay risk to this. There's some risk that we wouldn't want to ever exercise this early to cover that short option. So there are some elements that aren't difficult, they're just things that you need to learn, and you'll be able to do that at the Cashflow Academy at your pace and be able to really put these covered leaps to good use with knowing what risk management steps are in place so that you have a game plan. If the stock goes here, I know what to do. If it stays flat, I know what to do. If it goes down here, I know what to do. And we have a plan for any of those circumstances. The covered leap strategy is going to be something you'll want to employ. Now, a personal story. We talk about the leverage of covered leaps. Well, sometimes you get a little lucky. And that can happen in investing and trading. Sometimes a trade just goes perfectly. Sometimes when you're playing golf, you happen to hit the shot of a lifetime. And look at this scorecard. I don't know if you can see it right there, but that is a 1. That is the one and only time I've ever written a 1, and it just recently happened to me on the golf course. So the 17th hole, par 3, it's kind of a big downhiller. Happened to hit a 9-iron, perfect shot. It landed behind the hole, a little bit of backspin, and it had the slope. And me and the 3 others playing with me, I made the comment something to the effect of, "Oh, please go in," because you could see it was kind of rolling back towards the hole. And one of the other guys said, "Oh, it has a chance," and then it dropped in. If you've never gone arm to arm with 3 other men jumping up and down screaming, I highly recommend it. It was a lot of fun, personal situation. So now in the comments, tell me about your greatest shot on the golf course, or give me a shout out, get something in the comments. But go to the comments, make sure you hit the like and subscribe to get education that is fun, simple, and real. Now check out this video.